As many of you might recall, back in March of 2020, just as the pandemic was setting in, there was tons of market uncertainty. We weren't sure what was going to happen, not only with the virus, but also with the financial markets and the greater economy. Who knew what was going to happen? So Bill Ackman went on to CNBC and dropped this.
Hell is coming. Okay.
Meanwhile, he had a pretty significant hedge position through credit default swaps, which sort of works like a put against the market, against the debt market in particular. So if the market were to fall and default risk rose, he'd be set to benefit, and that's exactly what happened shortly thereafter. He used those funds to buy pretty aggressively into his existing holdings within his main hedge fund, Pershing Square Holdings, which I am a shareholder of, and he went on his merry way after pissing off a ton of people. But I guess he still had enough support to go out and start Pershing Square Tontine Holdings, which is the largest SPAC ever created. It still exists to this point, but he proceeded to piss off a lot more people doing that too. But we'll get back to that in just a second, because about a week ago, Bill Ackman was at it again. As we could see in his recent tweets from October 29th, he says that he gave a presentation to the New York Fed, and the bottom line is, we think the Fed should taper immediately and begin raising rates as soon as possible. He followed that up with, we're continuing to dance while the music is playing, and it's time to turn down the music and settle down. Funny that he mentions music, seeing as though he just closed on the deal with Universal Music Group. But we'll get back to that. I'm getting ahead of myself. That's part of the SPAC deal. Now, you might be wondering, why does Bill Ackman, a hedge fund manager, get to give a presentation to the Federal Reserve? And this specifically is the Federal Reserve Bank of New York. There are multiple branches of the Fed. Well, Ackman is part of this group called the Investor Advisory Committee on Financial Markets. And there are some recognizable names here in the finance space, specifically Ray Dalio, another billionaire hedge fund manager, Paul Tudor Jones, among others. And I guess you could say this is a collection of very rich people who give their 2 cents to the Fed for whatever it's worth. Well, Bill Ackman shared his recent presentation, so we could take a look at some of these gripping PowerPoint slides now. As Ackman puts it, the economy has made substantial progress towards the Fed's employment and inflation targets. The economy is likely to experience a significant boost as we fully emerge from the pandemic, which is not yet reflected in employment and inflation figures. He notes that current Fed policy is to begin tapering shortly, but wait on raising interest rates until further evidence of progress. But he says that a wait-and-see approach to raising interest rates creates significant risks given the substantial progress to date on employment and inflation, combined with the unprecedented economic backdrop. He highlights the fact that there are currently more job openings than there are unemployed people, per the Bureau of Labor Statistics, and he stresses that inflation has remained elevated in the mid to high single-digit range, considerably in excess of the Federal Reserve's long-term target of 2% annually. And therefore, the Fed should chill out, stop doing what it's doing, and allow interest rates to come up quite a bit. But raising interest rates would almost certainly have a negative impact on the stock and financial markets, so why would he advocate for that? After all, Bill Ackman manages billions of dollars in his hedge fund, so he'd have a vested interest to not advocate for this, isn't that right? Well, don't worry, because Bill Ackman has you covered. As he follows up in a later tweet, as we have previously disclosed, we have put our money where our mouth is in hedging our exposure to an upward move in rates, as we believe that a rise in rates could negatively impact our long-only equity portfolio. There it is. You know, Bill Ackman wouldn't say anything unless he had a hedge open in the first place. I don't know if this is a habit of his, where he'll have some sort of short-oriented position, whether it be a short directly, put options, credit default swaps, whatever it is. He'll have this open, and then he'll go and say the thing that would directly benefit that side of the portfolio, and you'd think the negative stigma against this sort of practice would be enough to stop it, but I guess not, because this goes pretty far back. We have the Herbalife short, which was a complete disaster for him, even though he spent a lot of time and energy talking down on the company, saying that it was a Ponzi scheme, among many other things. Whether they were true or not, it fits that same general mold. He had a short position open, and then he proceeded to talk very publicly and negatively about the stock. Fast forwarding to 2020, he had a credit default swap position open, proceeded to go on to the media and said very alarmist things about the financial markets and the economy in general, and then proceeded to cash out there. And now here he has a hedge open while he's trying to say that interest rates should rise. I guess as old Charlie would say, show me the incentive and I'll show you the outcome. And 2021 already has not been a great PR year for Bill Ackman, especially with what happened with Pershing Square Tontine Holdings, that big SPAC I talked about earlier. Pershing Square Tontine Holdings was, and I guess still is, the largest SPAC ever created. A SPAC is a special purpose acquisition company. It's basically a cash vehicle that's used to merge with some private company to take it public. And the whole point is it's often easier easier for the company to do that rather than actually go public itself directly, because there's less disclosures to make, and it should be a little bit easier because you already have one company that's public on the SPAC side. It's really a workaround to the current system, and it's not a surprise that the SEC has started to crack down a bit on the way SPACs work and is starting to put some heightened scrutiny on SPACs. But anyways, after raising billions of dollars for his SPAC, he was ready to merge with a private company. And he ended up announcing that Pershing Square was going to be using a large amount of its cash to buy 10% of Universal Music Group, the large music company. The remaining money that wasn't used towards the UMG deal was going to go towards this very complicated structure where some of it would go into this RemainCo, where it'd just be another cash vehicle. And then there'd be this other entity called a SPARC, or a Special Purpose Acquisition Rights Company, which was a completely new invention. And it was going to be the right to participate in essentially an IPO of sorts. So it'd be a lot like a SPAC, only you wouldn't actually have to put your money up front. You would just kind of get this option to participate in the future if you decided you wanted to, of course. Well, the SEC didn't like that very much, and they said that this probably wasn't going to be okay per their guidelines. So Ackman and the Pershing Square Tontine team decided to just kind of give the UMG rights to Pershing Square Holdings, the hedge fund that was actually sponsoring the Tontine Holdings SPAC. And in that way, Pershing Square Holdings got to enjoy a really great price on UMG, which proceeded to take off once it went public pretty recently, and that has helped out Pershing Square Holdings, the fund. And meanwhile, the Pershing Square Tontine Holdings shareholders were left hung up to dry. And boy, once again, were people pissed off by Bill Ackman. And around the same time that this SPAC deal fell apart, Bill Ackman and Pershing Square got sued in what's still an ongoing lawsuit, alleging that the SPAC that they have, Pershing Square Tontine Holdings, really is an investment company, and it's violating the law in how they're operating this company. In general, the plaintiffs argue that Pershing Square Tontine Holdings should have to file under the Investment Act of 1940, which requires a bunch of different filings and disclosures, and basically doesn't allow Pershing Square Tontine Holdings to act as it has been acting as a SPAC. And really, this lawsuit raises much larger questions about the legality of SPACs as they are in general. And Ackman publicly responded to this complaint, saying that the lawsuit was without merit, but he also said that he was considering just kind of winding up the SPAC and paying everyone their money back and just calling it quits. And if that were to happen and Pershing Square Tontine Holdings wasn't to find another deal in the future, then anyone who invested in Pershing Square Tontine Holdings essentially gave Bill Ackman leverage to go do this nice UMG deal for Universal Music Group. And if that were to happen, if the Tontine Holdings SPAC was to simply wind up and distribute the money back to its shareholders rather than actually making a merger at any point, then basically all the Tontine shareholders did was allow Ackman to get the leverage to negotiate for the UMG deal that then benefited Pershing Square Holdings, the overarching fund, but totally stiffed the SPAC shareholders. I don't think this was Ackman's plan all along, but it definitely does not look good. But anyways, I've been considering doing a video going into much greater detail about this lawsuit. If you guys are interested in that, definitely let me know in the comments below, and be sure to subscribe so you don't miss future updates. But that's a little bit about what's been going on with Bill Ackman, at least over the past few months. I still own a significant portion of my portfolio in Pershing Square Holdings, his overarching hedge fund that got the great end of the Universal Music Group deal. It caused the fund to go up quite a bit. But part of me just wonders, why can't Bill Ackman just chill out a bit? Just let the market do what it's going to do. Stop going public with these weird things and weird positions and confusing people and making people angry. It doesn't seem like it's going to really bode well for the long term, but I guess nobody's perfect? Anyways, we'll see what happens in the future for our friend Bill Ackman. Anyways, if you guys like this video, definitely like it. It's how it helped the channel out a lot. Or alternatively, you can go ahead and short the dislike button by talking loudly about how the dislike button is bad in the comments below, making it very public, of course, and that ideally can help pump up the likes as well. And stop by the subscribe button while you're at it, because that also would help the channel out a ton. And lastly, check out the free stuff and the affiliate links in the description below. But until next time, take care.